This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
Hello and welcome, I am Suyash Maheshwari and you are watching Morning Brief at 9 here on News9, a show where we dive into the latest updates on stock markets, finance, business and the economy with all the key insights to help you stay ahead of the curve. Let's begin with the 9 cues that you need to track before the market opens. Now, Nifty climbed about 6% last week from lows, in fact, and the mid and small caps, they stole the show. Now, the Indian stock markets took a breather last Friday, breaking its 5-day winning streak, and this came as the Reserve Bank of India held steady on the repo rates at 6.5% for the 11th consecutive time, but surprised by cutting the cash reserve ratio or CRR. Now, while the frontline indices saw minor dips, the real stars were the broader markets. Both Nifty, Mid-Cap 100 and Small-Cap 100 indices logged gains of about 0.5% and 0.8% on Friday, extending their winning streak to 11 sessions now. For the entire week, it was all about momentum. The Sensex and Nifty logged gains of over 2% each, making their best weekly performance in 6 months. Auto stocks shifted into high gear. Bajaj Auto, Tata Motors, Maruti Suzuki led the charge with gains of about 2 to 3%. Notably, Maruti has announced a price hike of up to 4% starting January 2025, citing rising input costs. Now, here's the bigger picture for you. From the November lows, the Nifty has climbed over 1400 points at about 6%. Meanwhile, the mid and the small cap indices, they are outperforming and firing on all cylinders, rising 9% and 11% respectively. So what's the big takeaway for you investors out there? Now, while the markets are catching their breath, the broader rally in mid and small cap signals strong investor appetite. Now, if you are considering an entry point, focusing on these segments could perhaps pay off. Moving on, foreign investors, they have returned back to Indian markets, pumping in 24,500 crore rupees in the first week of December. Now, this follows heavy outflows in October and November, including a 94,000 crore pullout in October. September was a bright spot, however, with inflows of around 57,700 crore rupees, showcasing the volatile nature of foreign investments. The takeaway that you should take from this and the return of foreign investors is that there is a renewed confidence in Indian markets. For local investors, this is a good time to stay invested and focus on sectors that are attracting global attention while keeping an eye on market trends and for potential opportunities. Alright, let's also look at the Asian markets this morning because they kicked off Monday on a weak footing led by sharp decline in South Korea. Now, investors are bracing for a busy week of central bank meetings with expectations that borrowing costs could finally ease across major economies. Adding to the market anxiety is the upcoming US inflation data, which could pave the way for further policy easing by the US Federal Reserve. Although geopolitical tensions are also in the play. Now, political unrest in France and South Korea coupled with instability in the Middle East, including the reported collapse of Syrian President Bashar al-Assad's regime, is weighing on investor sentiment. So, how could this impact stock markets today? Now, with Indian markets yet to open, global cues suggest a cautious start. Watch for how easing borrowing costs and geopolitical risk could influence foreign investments and market sentiment in India this week. Gunfire and celebrations erupted in Damascus on Sunday as rebel forces announced the ousting of President Bashar al-Assad, ending over 13 years of civil war and decades of Assad's family rule. Now, this seismic shift in Syria marks a critical turning point for the Middle East with wide-reaching implications for the global economy and geopolitics. Now, the rebel coalition declared plans for transitional government to steer Syria towards free elections. However, the path ahead is fraught with challenges as the country grapples with diverse factions, including groups linked to the US, Russia and Turkey, as well as Islamist forces Assad's departure also weakens the influence of Russia and Iran, his key allies during the conflict. Key takeaway for you, for the investors out there and for the broader economy in general. Now, instability in Syria could fuel fresh regional turmoil, impacting global oil markets and trade routes. Indian markets might feel the ripples from shifting geopolitical alliances, underscoring the need for vigilance in a volatile global landscape. And that has also impacted oil prices. Oil prices showed a mixed trend on Monday as weak demand from China balanced out rising tensions in Middle East following the overthrow of Syrian President Bashar al-Assad. Brent crude futures dipped slightly by about 1% and they were hovering just above the $71 a barrel mark, while US West Texas Intermediate or WTI crude rose by 1% to just about $67 per barrel. Last week, Brent lost over 2.5% and WTI dropped by 1.2%, with analysts predicting a supply surplus next year due to weak demand. Saudi Aramco, the world's largest oil exporter, cut its January 2025 prices to the lowest since early 2021, reflecting weak demand, particularly from China. The key takeaway over here is that as a net importer, India may benefit from lower oil prices, reducing import bill and easing inflation, which remember has been a problem for India. However, industries like aviation, transportation and manufacturing, which are heavily reliant on fuel, could see mixed impact depending on price fluctuations. Also, let's look at the US markets and how they closed on Friday. On Friday, the S&P 500 and Nasdaq closed at record highs, buoyed by strong jobs data that fueled expectations that the US Federal Reserve might cut interest rates later this month. However, the Dow struggled, dipping almost 0.3%. The S&P 500 rose 0.25% and Nasdaq gained 0.8%. Now, the US Labor Department's November non-farm payroll report showed jobs growth of 227,000, slightly surpassing estimates, and unemployment, although ticked up just a bit, signaling a healthy yet not overheating economy. The takeaway for you from this, the jobs data that has come out and US markets on rallies, that global cues of interest rate cuts and strong consumer stocks could influence investor sentiment in India, especially in sectors like retail and technology. Alright, let's look at the yellow metal. Gold prices saw an uptick after China's central bank added bullion to its reserves in November, ending a 6-month pause in its purchasing spree. This move has provided key support for the precious metal, which has been a safe haven investment during the times of uncertainty. The takeaway for Indian markets is that as we enter the festive season, gold's rise could drive higher the demand in India, traditionally one of the largest consumers of the metal. With the US expected to cut interest rates, gold may continue to benefit from lower yields on traditional investments, making it a more attractive option for investors looking for stability. This could boost both retail and investment demand for gold here in India. Shifting focus to the world of cryptocurrency, Bitcoin prices, they fell below the $100,000 mark this morning and were hovering just above the 93,300 mark. Now, the cryptocurrency had crossed the $100,000 milestone for the first time last week, a feat that even its critic took note of. This historic surge, by the way, was driven by growing optimism surrounding the incoming US administration, with President-elect Donald Trump nominating pro-crypto attorney Paul Atkins to the head of Security and Exchange Commission, or the SEC. Bitcoin has surged more than 50% recently as investors bet on a more crypto-friendly regulatory environment. Alright, before the market opens, let's look at the trends and how the markets could open in today's trade. Now, trends on GIFT Nifty, they indicate a flat to positive start for the broader index in India, with a gain of 15 points or about 0.06%. Now, Nifty futures on GIFT Nifty were trading at around 24,739 level, and this was as of 8:30 a.m. this morning. Alright, we have a very special guest joining us on the show, Andrew Holland, CEO of Avendus Capital. Andrew, thank you for giving us time here on News9, sir. Always a pleasure speaking with you. Now, Given the ongoing geopolitical tensions in Syria and the upcoming US economic data, how do you think these global events will impact the average investors in India? I mean, should they be more concerned about their investments, especially in terms of market volatility and potential shift in global economic policies?
See, I think between now and the end of the year, this Santa Claus rally, which we've been seeing globally, probably has the legs to go further, because you're going to have the Federal Reserve most likely reduce interest rates by another 25 basis points next week. And of course, you're going to have that nice run up to President-elect Trump taking over the administration in January. So that kind of leads the way to a kind of a positive US market in particular. And obviously that will have the positive impact for other markets. So, with FIIs or, foreign portfolio investors also kind of towards the back end of this month will be less active, given domestic flows remain strong, markets could follow suit. So I think these things in between, even if you look at the geopolitical, problems that we're seeing this morning in terms of Syria, it's not really impacted the oil price. If anything, the fact that Saudi Arabia is going for lower prices because of weak demand is probably having more of an impact than what's happening in Syria. So I think the market's taking that into account, and I think just all eyes now will be on what President-elect Trump does in his first month in office. So I think the volatility, to answer your question, is probably going to be more January than it is December at the moment.
All right, Andrew, also wanted to get your views on the recovery that we have seen since mid-November. Nifty has gained nearly 1,400 points or 6%. I mean, what are you making of this massive recovery that we have seen? I mean, in just a couple of weeks, can it be trusted? Do you think that investors can really look at this recovery and perhaps add to the positions?
I'm a little bit more skeptical. I mean, when we had that big fall, when the Nifty was down, I think 11% from the highs, we were in very much oversold territory. And then, of course, the Maharashtra elections came through as well for the BJP. So that was a kind of catalyst to get the market to kind of, I would say, kind of just move up from the lows, which we've seen. And it's been as you said, a powerful kind of rally, aided, I think, also by global factors. But what I would say is this, is that, there's no catalyst at the moment for the markets to keep moving higher, because, earnings are under pressure. We saw a big downgrade by the RBI in terms of the GDP forecast. And that's even higher than most consensus in the market. The market consensus for GDP for this year is running between 6 to 6.3%. So there's still a lot of slowdown that could possibly happen between now and the end of the year. So I'm a little bit skeptical that earnings are going to pick up, and if anything, more downgrades could come. So it's a nice Santa Claus rally, enjoy, but I'm not sure I would be buying into it at this point.
Andrew, also, you were talking about how the Reserve Bank of India sort of surprised the market. I think considering the GDP numbers, some of us were expecting that we may see a rate cut, especially with at the time when US Federal Reserve has been reducing rates. They have reduced rates by about 75 basis points. But what they have done, what RBI and Shaktikanta Das have done, is reduce the CRR or cash reserve ratio limit by about 50 basis points, which will inject by about 1.16 lakh crore liquidity into the system. Do you think that will help bring back consumption at a time when we are just entering the festive season, the wedding season, or do you think that more needed to be done as far as the policy was concerned?
No, I mean, it does help at the margin, and obviously it gives you an indication that the RBI is looking towards moving interest rates lower going forward. I think it was a difficult decision. I mean, I agree. I think they should have gone with 25 basis points to front end the slowdown that we're seeing in the economy. But again, that said, they can now see what the Federal Reserve does next week, and they can also see, initially, what Trump policies might be when he takes over in kind of late January. So gives them that kind of comfort level in terms of, seeing what's happening around the world, not just withstanding what's happening in India. So I'm okay with that. What I would say is that in a slowing economy, you got to find companies and people to want to borrow, right? So if it's a slowdown, there might be a slowdown in consumption as well as corporate borrowing. So I'm not liquidity always helps at the margin in terms of the interest rates you're paying, but not really. I think a rate cut has to be there. So I think the longer we leave it, the more I get worried about it.
Andrew, the markets have opened and we are seeing a bit of a cautious start to trading this morning. Nifty is down by about 0.2%. It is still holding above that 24,600 mark. The broader markets, they also seem to be mixed. The small cap index, by the way, continues to do well. It's up by about 0.15%. Some bit of correction in the mid cap. It's trading flattish with a negative sort of a bias. Although India VIX, that has been holding steady below the 15 levels, which is, I think, good to see. But across the board, we are seeing selling in sectors. Nifty Bank is down 0.25%. The auto stocks, they are trading on a flattish note. FMCG pack overall is down 0.5% or so. And, the IT stocks also are trading with a weaker bias. I mean, for the investors out there, what do you think is a good investment strategy and how should they approach the markets at a time when the global cues, they are indicating a lot of uncertainty? We have seen good recovery from the bottom. How should investors approach the market at this point in time, sir?
So I think, it's a two-pronged approach is what I would take at the moment. I think those who are sitting on or have liquidity at the moment, I think a strategy of just sitting on that cash. I mean, you can put it in fixed deposits or other, higher interest bearing instruments, just for the next month or so. And I'll tell you for why. I mean, I've gone through what I think is going to happen in December, which is, probably more of a positive kind of ending to the markets. But come January, that volatility starts to pick up. And, whilst there's lots of narrative about what President-elect Trump will do, he's unpredictable as well. So I'm not sure I want to kind of be ahead of what I think he's going to do or what the market might be telling me he's going to do. So I think I could just wait, see what some of those policies are, see if it's going to have an impact on global trade, how would that impact India. All of those things will come out in the next 1 month or so. So, even if, it's more positive for global global economy and for India thereafter, missing a few percent of the market rise in the longer term kind of rise in the markets, I'm okay with. So I think a strategy of just being cautious, sit on the sidelines with a bit of cash. Anyway, the valuations in India don't compel you to kind of think that it's going to be a great return in 2025-26. Earnings are being downgraded. So at best, you're probably looking at single-digit returns next year. I mean, high single-digit returns next year. So I think the expectations need to be pared down as well. And I think the trading range between now and January the 20th is probably between 23 and 25,000 on Nifty, with probably the bias towards the downside as we go into January.
But waiting on the sidelines hasn't really worked out for the investors. I mean, considering the strong 6% sort of a recovery that we have seen, considering like investors, of course, global cues that are coming out are quite indicating a negative sort of a bias also, and we have a lot to look forward to as far as what the policies of Donald Trump are going to look like. But if someone has a cash, what is the ideal strategy on how to, perhaps make a play on the market? Should they stick to, perhaps the SIP route, keep investing over there, look at perhaps passive investment modes like ETF, or maybe stock-specific approach could work out, considering that we have seen very good recovery in the broader markets, mid-cap and small caps. What a tremendous run they have been. Both indices are up about 9 to 11%. 11-day winning streak they are on. 95% of the market, as we know, is small and mid-cap. So what do you think is the right move for investors?
I think just in case of what you've said, I mean, I know you said they've been a sharp recovery, but if I look at some of the small and mid caps, I mean, some of them are down significantly. So there's been some pain there for the retail investor. If you just look beyond the kind of broad indices, because that's not really the story of some of the retail investors, or a large majority of the retail investors that I come across as well. So there has been some pain there. But you're right. I think 2 points. One is stick with your SIPs. I completely agree with that. You buy at the top, you buy at the bottom, and you buy in the middle. And I think over a long period, you'll make a very, very strong equity return. So SIPs is really the way to continue going. I think, obviously, if you've got a portfolio of your own stocks, you would know them. The retail investor would know which stocks they like. But I think, look at what you think is going to be the themes going into 2025. What are they going to be? Which of the sectors are going to be the beneficiaries? And then you can identify those companies, which you believe will be, the leader or the beneficiary of that sector moving higher. For example, we talked about this before, but the hospitality industry, people wanting more and more experiences. So the hotel sector, airlines, that's a longer term trend that's not going to go away from you. So those kind of sectors, I think, will continue to do well, and the companies, the leaders in those sectors, will continue to take advantage of the continued spending and experiences that more and more Indian people want to enjoy now.
All right, Andrew, before we let you go, also wanted to get your view on one particular sector, FMCG. I mean, that has been a major drag on the market. Earlier, it was that rural consumption was pretty much being a spoil sport. We were not seeing much green shoots of recovery over there. But something interesting happened in the GDP numbers. Agricultural output actually increased and, increased by about 3.5% at a time when overall growth was much slower. So there are signs that rural economy is recovering. But at the same time, the recommendations that have come from the GST Council, I think they are going to introduce a new tax slab, 35% tax rates on, tobacco, cigarettes, as well as aerated drinks, which could really impact some of these stocks out there like ITC, Godfrey Phillips, even Varun Beverages comes to mind. What is your overall view on the FMCG pack, sir?
Yeah, it's going to be a tough time. I saw there's a profit warning out by brokers on Godrej Consumer as well, following an analyst meet or whatever they've recently done. So there's still a lot of pressure on margins, and I think the problem for not just the FMCG sector, but overall for India Inc. is that your top line's falling, but your margins are really under pressure. And that's what's been leading to downgrade. So I think for FMCG, it's going to be a constant struggle this year. I don't think the rural economy is picking up as quickly as they would hope to take over the urban consumption slowdown as well. So the way I still like to play this FMCG is more through premiumization. And again, I think premiumization in the alcohol and non-alcoholic industry is something which I think will continue over the next 3 to 5 years minimum, and I think that's the way I would like to play it. As younger people, will move up the curve a lot quicker, than maybe people before that, in terms of just wanting to try, an experiment with higher premium drinks.
All right, that's Andrew Holland, CEO of Avendus Capital, for you, sir. Thank you for giving us time here on News9. Always great insights from you.
Thank you, and thank you for the opportunity. It's always my pleasure.
All right, with that, let's break in for a short commercial. We'll be back on the other side with plenty more stories to talk about. Stay tuned.
देश के भरोसेमंद फाइनेंस पार्टनर श्रीराम फाइनेंस ने मिस्टर डिपेंडेबल यानी राहुल द्रविड़ के साथ मिलकर एक इंस्पायरिंग एड शूट किया है। जिस तरह राहुल द्रविड़ अपनी टीम स्पिरिट और सबको साथ लेकर चलने की काबिलियत के लिए जाने जाते हैं, ठीक वैसे ही आज श्रीराम फाइनेंस सपनों को साथ सच करने का मकसद लिए हर इंडियन के साथ खड़ा है और दे रहा है बेस्ट फाइनेंशियल सॉल्यूशंस।
जब जुड़ेंगे तभी तोड़ेंगे।
श्रीराम फाइनेंस। तो क्या अगर आज अकेले निकल पड़े, कल कारवां लेके चलेंगे। तो क्या अगर छोटे शहर में बड़ा सपना देखा, मिलकर मुमकिन करेंगे। श्रीराम फाइनेंस हर इंडियन के साथ खड़ा है, क्योंकि भरोसा है हमें।
जब जुड़ेंगे तभी तो उड़ेंगे।
श्रीराम फाइनेंस।
Considered a wonderful product when it was invented. It solved many problems of human lives. We are talking about plastic.
Did you know the plastic in your house is as old as the oldest person in your family?
India almost produces somewhere around 9.3 million metric tons of plastic every year.
It is not dissolving, it is not evaporating, it is not vanishing from sight, it is just breaking down into our soil and ocean. So plastic is just going to be there.
So we need to go back to the questions, we need to go back to the start. When did water bottles come to our consciousness? Why was it marketed like that?
This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
Hello. If your money is fraudulently taken by somebody or if cyber scam takes place with you,
क्या हम कृष्णा दास गुप्ता जी से बात कर रहे हैं?
And you report it to the bank within 3 days of the crime, the bank is liable to pay you 100%. This is clear-cut guidelines.
मैं डिपार्टमेंट से बात कर रहा हूँ.
If you report it within 7 days, the bank is liable to pay you 50%. And if you report it 21 days, I think 25% or something.
और हमने ये देखा है कि आपके आधार कार्ड से एक सिम रजिस्टर्ड हुआ है यहाँ.
If the person gives information within the span of 3 to 4 hours, 100% recovery can be done. I personally have seen a lot of cases where 100% recovery has been done.
आपका सिम यूज हुआ है, इलीगल एक्टिविटीज हुई हैं उस सिम से. Oh my God. Madam, you are also involved in the Naresh Goyal money laundering case.
This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
Welcome back. You're watching Morning Brief at 9 here on News9, the show where we talk about the world of stock markets, finance, business and economy and how they could be, in your interest, because that's how where your money and finances are, very interlinked to what's going on in the world, around the world as well as in India. But something happened over the weekend and a lot of news is coming from Syria. Now, after more than a decade of devastating civil war, Syrian rebels declared the ouster of President Bashar al-Assad following a lightning offense that toppled his regime. Russia, a key ally of Assad, confirmed that he has left Syria and ordered a peaceful handover of power. But with a nation with many complex competing interests, the road to a smooth transition remains uncertain. More details in this Reuters report.
Gunshots rang out in celebration across Syria's capital on Sunday as rebel forces declared they had seized control of Damascus and thrown out President Bashar al-Assad. That spells an end to the Assad family's iron-fisted rule and comes after more than 13 years of civil war in a seismic moment for the Middle East. After mounting a sudden advance a week ago, the rebels on Sunday announced on state TV that they had toppled the president, calling him a tyrant. The Syrian rebel coalition said in a statement it was working to complete the transfer of power to a transitional governing body with full executive powers. It added that, quote, "The Great Syrian Revolution has moved from the stage of struggle to overthrow the Assad regime to the struggle to build a Syria together that befits the sacrifices of its people." Assad, who had crushed all forms of dissent, flew out of Damascus for an unknown destination earlier on Sunday, according to army sources. Russia's foreign ministry later said in a statement Assad had left the country after giving orders for a peaceful handover of power. As people celebrated the government's collapse in cities such as Aleppo, Syrian Prime Minister Mohammed Ghazi al-Jalali said he had been in contact with rebel commander Abu Muhammad al-Golani to discuss managing the transitional period. That marks a notable development in efforts to shape Syria's political future. The Prime Minister also called for free elections so Syrians can choose the leaders they want. But that would require a smooth transition in a country with complex competing interests from Islamists to groups linked to the United States, Russia and Turkey. Assad's ouster is a major blow to the influence of Russia and Iran in the region. They were key allies who propped him up in the long-running conflict's critical moments. The pace of events has stunned Arab capitals and raised fears of a new wave of regional instability. It marks a turning point for Syria, shattered by years of war that has killed hundreds of thousands of people. It has also forced millions abroad as refugees, many of them seen cheering on Sunday on the streets of their adopted homes from Lebanon to Germany. Western governments have long shunned the Assad-led state, but now they have to decide how to deal with a new administration that looks set to be influenced by a group globally labeled as terrorists. Led by the commander Golani, Hayat Tahrir al-Sham, or HTS, is Syria's strongest rebel group. It used to be an al-Qaeda affiliate, and some Syrians are worried that it will impose draconian Islamist rule.
Right, shifting focus, South Korean shares tumbled, recording their sharpest one-day decline since mid-November. Now, the benchmark Kospi dropped 1.73% to close at 23,087 mark as political turmoil rattled investor confidence following the failed impeachment motion against President Yoon Suk-yeol over the weekend. The leadership crisis intensified on Sunday, with prosecutors naming President Yoon in a criminal investigation related to last week's martial law attempt, while his former defense minister was arrested. In response, South Korea's finance ministry and regulators have vowed to stabilize market, activating contingency plans and preparing new measures to boost foreign exchange liquidity by the end of this year. US job growth rebounded sharply in November, recovering from disruptions caused by hurricanes and strikes. However, a rise in the unemployment rate to 4.2% signals a cooling labor market. This development is expected to give the Federal Reserve, the US Federal Reserve, room to proceed with another interest rate cut later this month in December.
A closely watched report from the U.S. Labor Department on Friday showed job growth surged in November, raising bets that the Federal Reserve would cut interest rates later this month. Non-farm payrolls increased by 227,000 jobs, more than what economists polled by Reuters had expected. It was a significant bounce back from October, when job growth was hindered by hurricanes and labor strikes. The job gains were led by the healthcare sector, followed close behind by leisure and hospitality. The labor market's resilience has been driving the economy, with the report also showing solid wage growth last month. Financial markets now see a roughly 90% chance of a quarter percentage point rate cut at the Federal Reserve's mid-December policy meeting, according to CME Group's FedWatch tool. The report also showed the unemployment rate ticked up slightly to 4.2%, but still at a historically low level. Wall Street's main indexes edged higher on Friday after the report's release, with the S&P 500 and NASDAQ touching intraday record highs.
In a major development in the food and bakery sector, the Khorkiwala family-backed Swiss Group has partnered with Singapore sovereign wealth fund GIC to pursue a majority stake in Theobroma, one of India's leading bakery chains. Industry insiders reveal that Theobroma, which already counts ICICI Venture as an investor since 2017, has been attracting investors from major private equity players, including Chris Capital, which is reportedly eyeing the dessert chain's Belgian waffle company. Swiss Group, a multinational bakery giant with over $500 million in revenues in 2023, operates in regions spanning the GCC, South Asia and developed markets like Greece and Australia. The Open Network for Digital Commerce, or ONDC, is introducing a new fee structure to ensure financial stability. Starting 1st January 2025, ONDC will charge rupees 1.5 for every successful transaction valued at rupees 250 or more, excluding taxes and discounts. This fee will be applicable to all sellers on the network based on their successful transactions. For credit products, the fee will be paid by lenders. An insurance company will cover for its insurance product, and AMCs or asset management companies will bear it for mutual fund transactions. Remember, this move aims to solidify ONDC's operational self-sufficiency while continuing to expand digital commerce in India. Alright, with that, let's take a short commercial break. On the other side, Akshay Bhagwat joins us to talk all about stocks.
ये किसान की मजबूरी है इसको जलाना बिल्कुल नहीं चाहता।
सुप्रीम कोर्ट का आदेश का पालन करें, कानून के दायरे में रहकर काम करें, लेकिन हमारे लिए तो नहीं कोई कर रहा।
There is no wind in the city to blow it all away. The air cannot rise high enough to disperse, so everything gets trapped, and that's the reason why every winter we see pollution levels spiraling out of control.
If I zoom down from the global findings to the national level findings, what we really see is that air pollution continues to be the greatest external threat to human life expectancy.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
India spends $75 billion on foreign cargo vessels.
$75 billion per annum. That's a lot of money.
Imagine a situation where 95% of our cargo is coming on ships which are not owned by us. If we are still not prepared, if someone were to say that we are not going to give you ships, then we'll be stuck. So the entire nation's economy is at risk.
We are very clear that shipping is also strategic, because without that you can't really be the third largest economy in the world.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching Morning Brief at Night here on News9, and let's now shift focus to corporate news and stocks that are likely to get impacted by news triggers that emerged overnight and early morning today. Now, let's start with Vodafone Idea. So, Vodafone Idea board is considering a fundraise of 2,000 crore rupees, and the board of directors is scheduled to meet later today and finalize the decision. Remember, debt-ridden Vodafone Idea is in talks to sell 3% stake in Industar to raise another 856 crore rupees. Now, what should you do with Vodafone Idea? That's the big question that we are trying to understand over here. And for that, we have a very special guest joining us on the broadcast, Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial. Now, Akshay, Vodafone Idea, I'm looking at the stock, not much movement on the price chart, at least after the news. But although we have seen a major breakdown in the stock price, it was hovering around that 17 rupee mark for the longest time. But over the course of 6 months, it has crashed by about 48%. Do you think that at least on the price chart, the stock is finding some stability around that 8 rupee mark?
Good morning, Suyash. Thanks for having me on the show.
Well, Vodafone Idea has been a pain point for most of the retail investors. Now, as you rightly mentioned, what I understand is there is a lot of buying which happened a few months back, and especially a lot of retail investors have somewhere or the other got on the wrong side of the stock when they had invested around the levels of 16 to 18 odd rupees, especially when the news of the follow-on public offer was in. But after that, the stock really has had a rough ride, and trading at the levels of 8.5, it has kind of been more of a backbreaker for most of the retail investors. Now, really from here, is it an investor's choice or not is the question. But looking at the price chart, still, it doesn't make me believe that this is more from an investment perspective. Today is an event where there is a fundraising, probably the meeting is on. But if you look at the price chart, 6 days, it's been more sideways, muted action. At least from a technical standpoint on price action, 8.75 is the level which you should keenly watch. If that level breaks, then only you can anticipate some bit of traction or momentum pickup in the stock, in which case the stock might see a level of 9.75 to 10. So this is more of a trading bounce back where you buy and hold for a week or so, subject to the condition that the level of 8.75 is breached. So at this point, there is no trade in Vodafone Idea. If you are holding the stock, keep a stop loss of 7, and at the levels of 10, whenever you get them, take an exit in the stock.
All right, another stock we wanted to get your views on is Paytm. Now, Paytm is reportedly set to sell stake in Japan's PayPay to SoftBank for $250 million. Early morning today, Your Story had reported that SoftBank had sold its stake in PayPay, the Japanese fintech, to its own SoftBank Vision 2 fund, making it exit from Paytm completely. Is this the end of the Paytm SoftBank partnership, and what does this mean for the future of Paytm's businesses? Akshay, wanted to get your opinion on the stock. I mean, we have seen some tremendous recovery in Paytm stock over the past 6 months. It's up almost 155%. I mean, what's driving the stock? It's at a fresh 52-week high. Earlier in the morning trade also, it surpassed that 1,000 rupee mark as well. What's really driving Paytm, and how is it looking on the price chart, sir?
Well, as you rightly mentioned, the last 6 to 7 months has been absolutely fabulous for Paytm on the price front. It's been a one-way rally, right, from 350 odd levels to around the levels of 990 where it currently trades. So it's almost been a doubler of sorts, and really undisturbed by what's happening around in the market. Now at the current level, really the question is, should you book your trading profits or should you be invested? Because the stock is now trading at a very key resistance. If you recollect, on 10th of February 2023, roughly in last year, the stock had tested these levels, and from there we had seen a serious fall till levels of 400. So it is an important resistance which we are dealing with right now. My suggestion is, if you are a short-term trader, you have a time horizon of a month or so, it is better to take your profits off the table at the current levels. The question is different if you're an investor with a long-term horizon, in which case really there is no reason to worry about. But if you're a trader, take your profits off the table in Paytm. If not, at least keep a revised stop loss below the levels of 750 and continue to hold the trade.
All right, shifting focus to another stock that has been making the news. It's Zomato. In the era of new age businesses listed in India, next up obviously is Zomato. Founder Dipendra Goyal has said that the company fully offsets that carbon emission of its fleet of delivery riders already, and the company is in line to become net carbon neutral by the year 2030. Do you see investors? I mean, let's Akshay, let's talk about the stock, because it's been on a tremendous run in the past couple of years. Even this year, it has delivered returns in excess of 140%. On Friday, broke past that 300 rupee mark. In fact, today itself, it touched a fresh record high of 304. Some bit of a correction on the price charts this morning, but still holding above that 300 rupees. What's your view on Paytm? Could it, have another year or potentially another, another 12 months of being a multi-bagger?
Well, Zomato was included in the futures and options segment from 29th of November. So that's a positive traction for the stock because now it's a new entrant in the futures and options segment. Really, the last 4 weeks in terms of the momentum pickup have been fabulous in Zomato. But on the short-term price charts, it is a bit overbought. It is showing some negative divergent signals. When I mean negative divergence, it means that from a short-term, there can be some bit of profit booking any day from the levels of 300 to 315. So one must be very careful if you are thinking to invest fresh or take a trading bet at the current juncture. A slight dip in the current levels to 280, 275 would make it more comfortable. If you're a long-term investor, really you have no reasons to be worried about the dip which I'm talking of is more short-term, is more for the trading fraternity. And if you get that dip which I mentioned, just go long on this stock because the longer-term price charts are still suggestive of a strong uptrend to be in place. And the target projection which I can see right now is still around 350 to 370 odd levels with a 6-month plus holding perspective.
All right, healthy outlook for Zomato out there. It's still holding above the 300 rupee mark. Perhaps look for entry points near that 280 rupees. That's what Akshay is recommending. Wait for some bit of a pullback. The stock does look slightly expensive, but let's shift focus to another stock that's making rounds today in the news, and that's Mahindra & Mahindra. Now, Mahindra & Mahindra has reportedly decided to drop the 6E from its newly launched Mahindra BE6E after Indigo said it was in violation of Indigo's copyright on 6E. Remember, the Mahindra BE6E was launched last week as a full electric vehicle at a price starting rupees 18.9 lakh rupees with a range of over 500 kilometers on a single charge. How will this impact Mahindra & Mahindra and potentially even Indigo? And we are seeing some bit of impact in trade today. The stock is down, but let's get Akshay's view on this and what should your ideal trading strategy be in Mahindra, because Akshay, again on the price charts we are seeing some bit of a breakdown in today's trade. Mahindra is down about 1%, holding above the 3,000 rupee mark. But in fact, even in the last 1 month, when the market has recovered by about 5-6%, it has trailed Nifty. It is up only 4%. Does Mahindra look like an attractive buying opportunity at this point, in this auto space, especially with the launch of its new fully electric vehicle?
Yes, so the new electric vehicle is launched, but there is a slight dispute, the news which you mentioned about the naming. And I believe this is just to do more with the intraday momentum in the stock. Yes, because of the news factor, there might be some bit of a temporary price jerk, in which case you might see a small downside in the short term for the stock. But really, there is no reason to be concerned about. Overall, this stock has been muted if you look from a monthly perspective, because the last 3 to 4 months has been the stock has absolutely been in a price range with 2730 being a very strong support which has been defined for the stock. So really, if you have a view from a 1 month perspective plus or even an investment horizon, really there is no reason to be disturbed about this news. Might have an effect only for intraday if it does, or a very short term, but really this is the stock to be invested in or to be buying in from a trading perspective also, because a breakout is in the happening soon. When I mean a breakout, a strong price momentum surge may happen, because I believe the stock is in an accumulation stage, and projections of target right now is working till the levels of around 3250 to 3300 from a 1.5 to 2 month perspective. So hold the stock is what the recommendation is.
All right, let's also talk about Indigo, because we have seen very healthy recovery from mid-November. Indigo share price, it was hovering around that 38, 48 sort of a range, but now it has in fact climbed by about 700 rupees, and in the last 1 month alone we are seeing a price increase of about 12%. There is of course news, this ongoing tussle between Mahindra and Indigo regarding the name, but what's your overall opinion on the stock of Indigo, especially as we head into the festive as well as the wedding season?
I think this is a very strong stock to be invested in. This is the stock where you at this point shouldn't be considering from a very short-term trading, because there is no breakout, or it is at a point where it's stuck in midway of a range. Now, really, the range which is working out, if you look from a 1 month perspective, is 5,000 on the upside and 37 on the lower end. At the midway, really, there are no intraday or short-term trading opportunities, but an excellent stock to be invested in if you can commit minimum a month holding from a current rate. So I would suggest this stock would recover. You might see the levels of 5,000 being revisited. In fact, from a slightly longer term horizon, the stock seems to be in the making of 5,500 plus. So be invested, continue to hold your stock. I think there are more upsides in the days to come.
All right, limited upside as far as Godrej is concerned, but we could see healthy appreciation in Mahindra & Mahindra, and that's the stock to buy as per Akshay Bhagwat. Now, Akshay Bhagwat, I want to shift focus to a stock that's making, that has made headlines today. In fact, the stock is witnessing a major breakdown on price chart, and that's Godrej Consumers. Now, Godrej Consumers has admitted to headwinds in its business environment, cutting growth guidance. Remember, FMCG stocks have been reeling under inflationary pressure and tepid demand in rural areas. Should you be investing in this sector, and especially in Godrej Consumers? Let's find out what the technical expert Akshay Bhagwat has to say. Again, Akshay, major breakdown in the stock on the price charts. We did see a big gap down opening. In fact, it's down about 9% or so. The company is indicating that there are headwinds that are coming about, and we are also seeing that rural demand, although we did see in the GDP numbers that there was some green shoots of recovery, but rural demand and consumption overall is not really picking up. Considering all of that and what the management is really saying, what's your view on Godrej consumer products, sir?
Yeah, so the news factor which you mentioned has been more of a momentum breaker for the stock. It's gapped down, and today even it's broken. It's one of the key support zones near the level of 1170 on the price chart. So that's a negative development if you're an intraday trader or a short-term trader. And where will the stock find a support is now the question. And if I were to pull up slightly longer-term charts of Godrej properties, somewhere I believe 1,000 is the level that if this sell-off continues, that's the point where there can be some respite in selling, and there's the point where the stock may try to find some support. So if you are more from the investment fraternity, I would suggest wait. There is some more pain left in the short term. 1,000 is the possible bottoming out point for this stock. For a trader, I would suggest not to get into this at the current rates. At the minimum, let it stabilize about 1,200. If not, try to buy it on a dip near 1,000. So these are the two levels for short-term trade buying. Otherwise, on an intraday front, I believe the momentum is on the sell side, and it is better to avoid the stock on the long side, at least for day trading.
All right, avoid Godrej Consumer Products as a view coming in from Akshay Bhagwat. Perhaps maybe look for entry points around that 1,000 price point, or maybe let it stabilize around that 1,200 per share mark. But Akshay, let's shift gears to the auto pack. I mean, Bajaj Auto CEO Rajiv Bajaj has once again taken a dig at Ola at a media event last week. He said, Ola to Ola hai, Chetak Shola hai. How will traders react to this never-ending trade of barbs? Will we see this, this play out in price action in today's trade? But also want to get your view on Bajaj Auto specifically. I'll move to Ola next. I mean, it was a best performing stock, one of the best performing Nifty 50 stocks in 2023, has delivered very healthy returns of about 36% in this year. With this EV movement going on, especially in the two-wheeler space, what's your view on Bajaj Auto? Could this be a driver in this, in this space, particularly in the two-wheeler space?
Last few days has been more of a painful session for the stock in terms of trading, because it's been seeing a lot of profit booking lately, and in the last couple of days somewhere I'm seeing the stock trying to stabilize around the 90-100 mark. So that's a positive first signal, which is suggesting that there can be buying near the 90-100 level. So this is more of a trading bounce back right now. From an investment perspective, really doesn't change things. The stock is in an excellent long-term strong trajectory. The correction which we have seen lately is more of a short-term nature. And somewhere around 90-100, I think there should be some stability getting back in the stock. Now, really, if you're buying here at this current level, it is more from a trading perspective. You have to keep your stop losses and targets for that slight up move. I think 83.75 is the stop loss you need to be working it if you plan to buy the stock around 9,000 and 9,100. And a trading recovery in the next 15 days can easily see the stock getting back to the 10,000 level. So be invested even from a trading perspective. Look out for bounce back opportunities because the bounce back seems right to be in the making in the current scenario.
Alright, Akshay, let's also get your view on Ola Electric because, you know, since mid-November, we have seen very strong movement in Ola Electric. The stock rallied as much as 50%, but we are seeing some bit of a, at least stabilization, not a major pullback from those 100 sort of levels on the price chart. It did get to 102 mark, but has witnessed some bit of a pullback and it's holding steady around that 96 rupee mark. What's your view on Ola Electric? Is it looking like a good, attractive opportunity, especially at a time when the stock is not really witnessing a big pullback after that 45% rally and really stabilizing above 95 rupees?
The one good thing is what I noticed that the stock is trying to stabilize. So that's a good sign because really after listing, it had its good share of run up. Then you had a profit booking round, which left most of the investors confused whether it's the right stock to be invested in. But the last few days gives me more comfort that somewhere there is a sanity which is getting around the levels of 75 to 80. So from a medium to long term perspective, from an investor's viewpoint, these are good levels if you have got them. If not, try to get the stock slightly on a dip in case the opportunity of 85 to 90 levels offers you those levels. That's the good point to buy the stock. I believe the worst is over and the stock should be again starting a healthy up trajectory from the current level where levels of 125 to 140 seem to be in the making from a 6-month perspective. So be invested for trading or for fresh buying. I think a slight dip near 85 would make it more lucrative buy the way the price charts are positioned.
Wow, a big price target coming from Ola for Ola Electric. I mean, Akshay Bhagwat over here is projecting a price of 125. That's about a 30% upside from current levels. So a very bullish view coming in from Akshay Bhagwat on Ola Electric. Akshay, always a pleasure speaking with you, sir. Great insights from you as always.
Thank you.
Alright, with that, it's a wrap in this edition of Morning Brief at 9. Thank you for watching.
In the chaos of battle, one weapon stands as a silent reaper of the battlefield. It can kill at ranges of over 3 kilometers. Just one precise shot can shatter enemy lines, disrupt entire formations, and tip the scales of war. This is a weapon born in Bharat, and it's crafted to take on the best in the world. This is the S Defense Sabre, and you're watching Guns of India.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Heartfelt appreciation to News9 and TV9 Network for organizing Global Summit.
I like to thank TV9 for presenting here a wonderful fusion of politics, industry,
जर्मनी और गुजरात के बीच इस मजबूत संबंध सेतु को न्यूज़9 ग्लोबल समिट का आयोजन और भी मजबूत बनाएगा। इस विश्वास के साथ आप सभी को एक बार फिर बहुत बहुत शुभकामनाएं।
I thank TV9 and the government of Germany for organizing this wonderful conference, and I wish you all the very best.
If it's a cancer, then what?
It's very distressing.
Anyone can have cancer.
Mentality है कि ये बीमारी मुझे नहीं हो सकती.
There's a thing called cancer is right inside me.
सबसे पहले जो होता है ना, डर जो होता है कि now at the end of the world.
My life went upside down.
Stigma associated with it, which is very scary.
In our country, more than 14 lakh people get diagnosed with cancer every year. Out of that, more than 9 lakhs die every year because of cancer.